Hey everyone, welcome to another episode. This is JR, founder and CEO of Social Market.
My name's Leon Hitchens. I'm the Chief Marketing Officer here at Social Market.
Yeah, and this is Social Ledger Report. Welcome to another episode where we talk about the markets, the state of the economy, crypto, mostly crypto. In this week's episode, we have quite a lot to talk about. So first, we're going to talk about the markets crashing after Nvidia released its quarterly earnings. I think a lot of whales were just selling. I have some friends who do a lot of this stuff, so I'm going to read some of their texts and without mentioning any names and get y'all's thoughts on that. And then MasterCard expands its crypto credential program to self-custody wallets. That was a post that was made, and we're going to talk a little bit about it. And then Coinbase actually released several product updates. And, over the course of this week and a little bit like a week before that we didn't cover. So first, the product announcement for December 17th at 2 p.m. Pacific time. In my opinion, it might be something to do with Base, but who knows. And then Coinbase and Kalshi enable USDC transfers within the Kalshi app. So that's actually pretty exciting. And the last one, JP Morgan is integrated in the Base app. You can swap JPMD for USDC. So we're going to do a live demo about it here in a moment and try it out. So before we get started, make sure you like this video, subscribe if you want to watch these type of content, dislike if you dislike it. This helps us massively. It helps us to create more of this video, more of this content for you. And let us know what you think. All right.
Let's jump in. I'm kind of excited. I want to talk the JP Morgan stuff on Base. I think that's a really interesting one.
It really is. So first, why don't we do a good old traditional thing we like to do, and we look into the markets. So this is Social Market, which has evolved quite a lot since showing you guys, and it's still growing and it's still expanding. So if we go into the markets page, we can see that, first of all, altcoin season is still leaning towards Bitcoin, which is unsurprising. Fear and greed index is at 14%, which is like extreme fear, and inflation is still sitting at 3%. Gold is down by 0.7%, and Invesco QQQ is still, right below 600. I know it was at 600 for a while. DIA is still sitting at 462, and S&P is actually below 700. So that's pretty interesting. Do you have any thoughts?
Yeah, a little bit. Obviously, the fear is setting in on the crypto world. What's Bitcoin at right now? Like 90?
Yes. Bitcoin is sitting at 84,000.
84, yeah.
It's right below
ETH at
85.
2,700. Like a lot of these are pretty. They're pretty flat and holding kind of at this new low, but there's a lot of worry in the market right now, especially because government shutdown created liquidity problems, and then after that, I think that there's, to your point, maybe some whales that are selling, but also what I kind of keep hearing is that there's a wave of people that are just shorting it on a view that obviously the Trump admin is very supportive of crypto, so they're just trying to kind of push out and crush crypto, which is, I think, an interesting take on it. I think it's a very conspiracy-esque take, but there is just a little bit of weirdness happening right now. I think on a long-term view, this is not abnormal. We could just see these crunches, and it happens. And 10 years from now, we're going to look back and go, "Oh man, the $1 million Bitcoin." Remember when it was 85K in 2025? But also it could be a long-term winter here. Like we could set in and see Bitcoin sit maybe at 85, 90,000 for the next couple of months, maybe a year, maybe more. I don't foresee that totally happening, but there is an interesting amount of market movements that just don't really line up to what should be happening, especially as everything's going on chain and everything's being pumped in.
Yeah, honestly, I think it's really interesting seeing how everything unfolded. I think I would blame Peter Thiel, and then who sold a lot of Nvidia, and then there was Michael Burry, who kind of started everything that has brought us to this point when he tried to short Nvidia and Palantir, which, funny enough, Alex Karp, who is the founder of Palantir, has said so himself that, Michael Burry is an idiot or something to that degree.
Yeah.
I don't remember the exact wording, but he called him an idiot or something like that. Funny enough, he actually sold $65 million worth of Palantir. I believe that's the exact number. Let me confirm. I'm going to ask good old ChatGPT. How much did Alex Karp sell in Palantir? And this was very recent. I'm not sure what you're doing, but so Palantir right now is sitting at, you know what, let me share my screen here just because.
Yeah, sure, because I was looking it up myself too.
Okay.
As soon as you said 65 million, I was like, oh, I have not seen this news.
There we go.
There's been a little bit too much news to follow around.
Yeah.
Oh, okay. Really cool.
There really is.
I did not know that's how it shows up dynamically in ChatGPT. That's very cool.
I love this. I actually use this all the time. So Palantir is, in the last day, it's down 0.87, but in the last 5 days, negative 20, and that's probably because of Alex Karp. So how much did Alex Karp sell in Palantir? Found regarding 585,000. Holy shit. So no, it's actually more than I thought. It's $96 million worth of Palantir that he sold. Dang.
That's a lot.
Is he shorting? What the fuck is he doing? Why is he selling so much?
Yeah, that's an interesting, Also, I think part of this is it's coming out right now that Planeteer and this government surveillance system has been out there. It's working with Ring, it's working with Flock. It's they're putting cameras in traffic cones to track people. They're labeling everything.
Yeah,
so I think there is a very scary moment for Planeteer right now because they could become something that everybody knows who they are when in reality they probably want to be the ones that nobody realizes who they are and just kind of keep rolling along.
Yeah. So that's fun. Now, let me share my screen one more time, and this time I'm going to share my conversation that I had with Grok. We're going to use AI quite a bit in today's episode. So I asked it, hey, so give me more details on popular posts about market crash after Nvidia quarterly earnings this week. And it said, Nvidia released its fiscal Q3 2026 earnings on November 19th, which was just a few days ago, reporting revenue of $57 billion, which beat Wall Street's consensus estimate of $54.9 billion by about 4% and represented a 62% year-over-year increase. Earnings per share, EPS, came out in $1.30, which surpassing the expected $1.25. So I don't know the whole heuristics on that, but I think it's really interesting.
This whole nonsense with Nvidia, chips being delivered, not getting paid for 43 days now up to 53 days. I saw how they gave XAI, $2 billion for X to essentially go get a line of credit or some debt financing at $12 billion to then go buy $12 billion of chips. It was essentially them financing a deal for XAI, which I thought was fascinating. There's just so much market pressures right now, and the market is really carried by tech stocks. QQQ is a prime example of this. It's just it's carrying the whole market.
40% of the S&P 500 its total valuation is based on only 7 companies: Meta, Google, Apple, Nvidia, Tesla. I forgot the other 2, but those are 5. 2 more, and probably Oracle if I remember. But
yeah,
it's
Oracle
crazy.
was one of the big ones on there. Yes, that was the actually I think one of the larger ones too.
Microsoft, I forgot to mention them. So yeah, it's probably 7 right there. So here's what it says, and here's what I think it's really interesting that could indicate largely why we're here right now, why just your Bitcoin's worth not as much as it once was. So key factors behind the reversal included renewed fears of an AI bubble, which investors questioned whether massive capex on AI infrastructure, for instance by hyperscalers like Microsoft and Amazon, is translating to proportional revenue growth fast enough. Profit margins for the S&P 500 hit 13.1% blended for Q3, but concerns mounted over stretched valuations in tech. Mixed U.S. jobs data released on November 20th, showing initial claims at 213 below estimates, but continuing claims raising dampened hopes for a December Fed rate cut, with odds dropping from 75% to under 50%. Broader macro worries like the late October jobs revision until December 16. That is read from Bloomberg. I don't know who fucking wrote that, but that was kind of a mouthful. Essentially, there's still like speculations that we are in a bubble because there's job being cuts. There is, obviously the S&P 500 is doing really well, but again, only by 7 companies, which is 40% of the total valuation. And, Bitcoin fell below $80,000 for a moment as AI and tech sentiment spillover. Did it really fall over 80%? That's what I am not entirely sure. Oh,
80, yeah, not 80%, but 80K. Yeah, I think it.
80.
I thought it did, or it was very close, right?
I believe so. So I'm actually in the developing environment here on Social Market, and if I look on the chart for the last 5 days, dang, I think it did drop very below 80,000. It was like right around that.
Yeah.
Dang.
When
Scary.
you filter for 5 days, does it tell you the 5-day low? No.
The 5-day low? No. So that's actually a good thing that we can add down the road.
Yeah.
Mostly we're doing other things in the app, but yeah, it's not telling us. And this is actually trading view indicators, so we can probably make this a little bit more dynamic actually. But yeah, crazy. So do you remember this, Leon? I shared it with you recently. So I love Wolf of Wall Street. It's an amazing movie, and this is what I found.
It's our time to party big.
Imagine them at 85 right now. So I went and looked. 7-day low was 82,175. 82,175 was the low right now. So,
dude, that is insane, dude. Like, I don't know. People are so they feed into their own narrative where, man, if Bitcoin drops below just a certain level, it's over. We're gotta wrap.
Yeah,
because
you had a bunch of like outflows from ETFs. It was like $600 million worth of outflows. But then on the flip side, you have like New Hampshire having a Bitcoin collateralized bond. There's like deposits of Bitcoin or Bitcoin from Coinbase. Like MicroStrategy's buying a bunch. So there's two sides of this market that's very fascinating. Yep. The folks that are like buy, keep diving in, like everything's going on chain. The chain is the future. And then you've got the other side of it, like freaking out, kind of melting because they're institutional money. So it's, like just somebody buying, like some fund buying Bitcoin as part of their investment strategy. Like it's just like the Bernie Madoff stuff when the firefighter funds, the retirement funds are putting money into his stuff. Like the same thing happens here. Like BlackRock's dumping money in places. So I think that there's sides of markets that understand what's going on, and then there's a side of market that's just like, hey, this is not cool, and we're just going to dip out of Bitcoin, go to some safer assets, and not deal with it.
Yeah. So one more thing I want to talk about here is, and this is kind of like putting it at rest with Nvidia. I know we've talked about it for quite a bit, but I was on Twitter the other day, and I believe I shared this with you. So I'm just going to open the image itself. It says, the algorithm that detected a $610 billion fraud, how machine intelligence exposed the AI's industry's circular financing scheme. And it kind of just talks about and I won't read it all because it's a pretty lengthy post. I think it's really interesting. You can read the full story on their Substack. We'll have the link to the description below if you're watching this on YouTube. But essentially, it kind of ties back to this whole inbreeding money moving between the same companies, whether it's through an investment, it's through a chips deal, it's something to that degree. So one thing I forgot to mention is, and this is kind of like the last thing on my end, in Nvidia's reporting for like the quarterly reportings, they actually said it was like over $50 billion reporting, I believe. It was a much higher value than even Wall Street wanted, right? Um, However, and this is what I will read from this post. Meanwhile, Nvidia stockpiled 19.8 billion in unsold chips, up 32% in 3 months. But management claims demand is insane and supply is constrained. Both cannot be true. Either customers aren't buying or they're buying without cash. So that's the red flag. They, in their quarterly reportings, they're saying, yeah, dude, we made all this money. However, I'm guessing this algorithm that they're using, whatever it is, about almost 20 billion of all that money made in the last quarter was from unsold chips. So they're either doing like some backdoor deals or it's fraud. It's not really real money that's being made. What do you think of that?
I think it's just money that's moving around. Like this is really hard for these types of companies, especially B2B. Like it's not uncommon to pay on net 30 or net 90 terms, or kind of push things back. Also, it's not uncommon to not pay your vendor, not on time. Like a lot of these big businesses will like try to float their extra pennies to cash in on some extra interest, or also just to maintain something. So I'm a little bit on the side of like, hey, there's definitely something happening here. This is really interesting and should be watched. But I think right now it's like not an uncommon thing that's happening. They're financing stuff. They're doing it. Like there's only so many big companies that can just throw down cash. Facebook, Microsoft, Oracle. The rest of these are doing everything on borrowed money. Like I think the number is $3 trillion is being deployed into AI and data centers. Trillion, and then only like one of that trillion is actually like real cash. The other two of that trillion is like financed in some capacity, venture backed or something.
Yep. I mean,
they're
it's
going to
insane.
private money lenders too, so like you can't see the outflow and inflow of this money. Like J.P. Morgan has to report that, but a private lender, they can kind of more or less do what they want.
Didn't you tell me at one point, like with farmers, and this is just an example, like with how B2B works. When it comes to B2B, like in HEB, here in Texas, you have, it's first and foremost not a grocery store. It's more of a tech company. It's $1 billion tech company, right? But they do offer groceries. So the thing with it is, they get all their groceries, their fresh produce from farmers, but they don't pay immediately these farmers, until I guess a certain quota.
Yeah,
Made.
it's
So
like they have to sell it. There's payment times, there's payment terms, how much you get paid. If you get your money faster, they take a percentage. It's no different than like a Venmo. If you want your money in 7 to 10 days, it's free. But if you want it faster, it's $1.99. If you want it the fastest, it might be $2.99. The same thing happens everywhere in the world. Like even on the marketing business that I've run, like in the past. Some folks are like, hey, I want to pay net 30. Some are like, hey, I would like net 90 terms. And then you have to negotiate. Like it's always a negotiation on money. Like whenever we try to do it, we try to never pay all the money at the same time. Even on deals that we do, it's like, hey, we'll pay you up front and then we need a 90-day term after that. Like it's always going to happen because it's going to make the best terms for us to keep that money, that cash on hand. Same thing with a lot of these companies, I bet. Even on their debt flows, they're probably saying, hey, let's try to finance some of this money. Let's keep some of this money on hand to do something else. And there's just, all of that happening out there.
yeah, and it's interesting. People, investors tell me B2B is more predictable money than B2C. And I'm like, not really. It can be a little bit more predictable, sure, like based on the business model, but businesses also don't pay immediately, or at least when the bills are due. So it's kind of like the same thing. So I think, people would need to learn that more and understand how that works more.
Oh, yeah.
But all right. So for now, man, I have so much more I want to talk about the market, but we do want to cover other things that we said we would cover, like the MasterCard, and it's expanding its its crypto credential program to self-custody wallets. I think that's pretty big because crypto wallets, self-custody wallets, it's kind of like the new medium. Ever since FTX collapsed, people just stopped relying on self-custody. Excuse me. After FTX collided or collapsed, people stopped using central exchanges, which is part of our thesis, our part of our mode at Social Market. We are a self-custody wallet that gives you security, and we warrant your crypto from losses because our security is really that good. So, I mean, shameless plug out of the way, right? But I mean, it's really where the market is moving. The market is moving to more DeFi, more decentralization, more self-custody, and that's kind of like the moat of crypto. You don't need to rely on central authorities or banks or governments to handle your money. So MasterCard doing this is amazing in my opinion.
Yeah, and they're putting it on the Polygon blockchain. It looks like they're going to use the Polygon like naming system too.
Really?
Yeah, this will be the interesting part of how it like goes. Like I think this is kind of like every fight in the world is what becomes like the main standard. It's just like Betamax and VHS, DVDs, and then it was like the Xbox had those like HD DVDs and stuff. So I think we're gonna see kind of like what sort of stuff works. I feel like one chain can handle majority of stuff in the future, and I bet you there'll be different currencies and stuff, but I bet you there's gonna be like an underlying infrastructure that powers majority of like wallets and what majority of people use. Just like in the United States, it's iPhone, but if you go anywhere else in the world, it's Android.
Yeah, I mean, that's a good point. So this is from CoinMarketCap, and this is on Twitter. It says, latest, MasterCard has expanded its crypto credential program to self-custody wallets. We already said that. Now, this allows users to send and receive cryptos using verified username style aliases instead of complex wallet addresses. So this, in my opinion, is huge because the biggest issue with crypto right now, it's how clunky the UI UX is. Sometimes you need to send if you want to send crypto in the style that you can send money with Cash App or Venmo or even Apple Pay is probably the best in the industry because it has several methods. You can just put your phones on, you can tap tips in a non-sexual way, right? Yep. You can tap tips and it sends the money. But with crypto, it's far worse because you need to scan someone's QR code. And in some cases, I think Coinbase has been better about this, the best one in the industry. But otherwise, you need to either manually, this was back in the day, you had to manually insert the address, which is long and complicated, but you could also copy and paste it, and you could hopefully, in the event that you're doing so, hopefully you're not putting another character or another letter in your keyboard because it'll send all your money to another address that you don't even know about.
Yeah, and I think the names that are coming out on Polygon are pretty cool. Base has played with it. Ethereum has...
Do you have access to that? I've never seen that, I'll be honest.
What, the
username, Polygon usernames?
I haven't used it, but I've seen people talk about it out there. It's just like the ENS system where you can send stuff to like leon.ens or something. Like it's the same thing with Polygon. I think that new one on Coinbase, it's called Moan or Mana, whatever it's called. It's going to have a system. It has a system of just using names and stuff too. Like Phantom Wallet has a name system now. Phantom Wallet too. Like we talk about that a lot. Like when I went and go create a new wallet, you don't even need to create a wallet with a recovery phrase anymore. You just need an email. I was like, that's very interesting.
That's amazing. And yeah, I think this is the direction crypto should go because some people might be like, oh, well, it's becoming too centralized. All these big companies are jumping in. No, I think this is what has to happen in order to make this industry more useful and more accessible to everyone in the world. So, I mean, this is from Polygon. It's got its blog post that says, MasterCard selects Polygon to power verified username transfers for self-custody wallets. MasterCard, Polygon Labs, and Mercurio are bringing verified alias-based identities to self-custody wallets, simplifying crypto transfers and advancing the next generation of global payments. You can read the entire blog on the description if you're watching this on YouTube. But that's amazing. I'm actually super excited.
Yeah, like I think we'll see what plays out and how it pans out, but I'm excited to see the large banks and large institutions start accepting and adopting this, because I think it's going to lead us into that adoption phase where everyone's doing it.
Yeah, dude. Great. I know that one's gonna be a little bit more of a short story. Let us know what you think. Like this video again. Shameless plugs real quick. Like this video if you like it. Dislike it if you dislike it. If you want to watch more of this content, just subscribe to the channel. It helps us a lot. All right. Anyways, let's talk Coinbase. I think from here on, it's just gonna be a lot of Coinbase talking points.
Okay.
So Coinbase unveiled its product release or their product announcement on December 17th at 2 p.m. Central, or excuse me, 2 p.m. Pacific. We live in Central Time, so it's just a norm for me to say that. So here it says, this is the original post and it's from Coinbase themselves. Exciting product announcements. So product announcements, so that's in plural. So there's going to be several products. Key business updates and lots of other cool stuff. Well, we'll see what cool stuff they have. A new era of Coinbase is beginning. So what's really interesting is this graphic, which by the way, amazing graphic. They have this cube around the Coinbase logo, and this is just my prediction. It has something to do with Base. And I also saw somewhere on people who are with Base, like Jesse Pollack, they were explicitly saying like, oh, Base is going to have like an update or an overhaul or something, which I'm actually kind of excited for that. So in my opinion, yeah, it's just going to be another Coinbase and Base integration, but I'm actually kind of excited to see what happens.
I also think there's a possibility they at least outline their token. I don't know if they'll. I don't expect the token launch this year. Like we could check Polymarket here. I'm very interested in that, but I think they could at least outline a launch plan or what will happen. So like there's this discussion by December 31st or December 31st 2026 or 2025. I think again this one makes a ton of sense. Like buy this at the rate. It makes the most sense in the end, because I think even if they outline a token, they're gonna have to turn around and set it up and everything. I was a little surprised that Coinbase didn't launch with their own token as an ICO product within Coinbase on the get-go versus launching with this Monon one. So I think they could talk about that and then say, hey, this is what our token's going to look like.
Nice. Okay. I'm actually excited. So I'm here on, if we're talking about prediction markets, which I always love to talk about them, it's my new favorite medium of betting or trading. And this is kind of why I still like to use Polymarket, just because it is more crypto native. And I mean, Kalshi, we'll talk here about more about Kalshi using Coinbase. So I look at Coinbase and I'm not seeing any base predictions. So sometimes it just feels like the predictions you can make on Kalshi as far as crypto are pretty lacking compared to, again, Polymarket. So, let's look at Polymarket. I don't think I'm logged in, but if I look at Coinbase, and again, you just shared the one about Base, so that's a prime example. But look, Hyperliquid listed on Coinbase in 2025. It's a pretty cool trade. Perps offer more than 10x leverage. Which CEO will be gone in 2025? Which looks like Brian Armstrong is somehow here, which I would not bet against Brian Armstrong. But look, there's like a whole section for crypto, which again, there is one as well for Kalshi. But I mean, a lot of it is not just like crypto movements. You can see, will Satoshi move any Bitcoin in 2025? Obviously no. But you're seeing things like, will MetaMask launch a token by, my point here is, and I'm trying to be brief here. My point here is on Polymarket, there are far more bets about crypto than there are on Kalshi. Kalshi, I feel like they're just leaning in more on sports, on politics, and culture. So while we're still talking about prediction markets, So Kalshi made a kind of deal, I guess, with Coinbase, where they're now enabling USDC into Kalshi, which amazing. I don't want to pay. I don't want to pay a lot of transaction fees, nor do I want to wait 3 days to move my money. So I'm obviously going to be using USDC. Kalshi users can now deposit and transfer USDC, which is powered by Coinbase. That's the essence of the post. So I say we try it out right now. So here I am. I'm pretty much logged in on Kalshi with my account. If I do deposit cash, debit card, it's a 2% transaction fee. Bank transfers, there's no fees, but you can also do higher deposits. With crypto, you get higher deposits in just 30 minutes. The fees vary, which is pretty much gas fees, also service fees, I suppose. So if I go to crypto, waiting for this to load, I can not only send USDC, but I can also send other kind of tokens. So that's kind of interesting.
That's impressive that you can send almost anything, but it's powered by zero hash. So I wonder if this is not the Coinbase iteration of it.
Yeah, that's interesting. Maybe they're doing an update because USDC is supposed to be powered by Coinbase, but they have zero hash. So that's interesting.
Yeah.
So I can select the USDC network. And this is kind of what I mean by the UI being a little clunky, my bad. So first token, it's actually interesting that you can send PayPal USD and Ripple Labs USD. So those are like other stable coins. DAI is another stable coin. USDT is another stable coin. WIF, I think this is a meme coin, so that's interesting.
Yeah, there's a lot out there of just random stuff.
There is. So let's say we do USDC. Okay, we're gonna select the network. So I'm gonna go with Base because it's the cheapest network. It tells you your limits. 40% fee, minimum $1. Okay, that's 0.40 is what I mean. It's kind of high, but I don't know how to feel. And yeah, you can just send it, copy your address, and yeah, that's my address. If you guys want to send me some USDC, that'd be nice. But all right, that's cool. I like this. That UI is not super clunky. I think it's a little confusing when you're. No, actually, I like that flow because it says pick your token and then pick the network. Maybe if there were like a little infographic or a little like tooltip that says what's this about, that'd be even better. But I'm just thinking 100%. Here on the perspective of just your average consumer. So yeah, that's kind of cool.
Okay, I gotta jump. JR will keep running, and then we'll keep the show going.
Okay, so it's just me now. Leon is a family man, so he had to take care of some stuff with his family. So it's just you and me. All right, so I guess for our last story here is JP Morgan clients can now swap JPMD for USDC on Base, which that sentence should break the internet. JP Morgan payments move trillions per day. It dwarfs the entire stablecoin industry. This is how 1,000x more dollars go on chain. So it's kind of interesting. I know the liquidity or the amount of money that is transacted every year on USDC, it's in the trillions. But if JPM is in the trillions per day, then yes, that is a 1,000x. So that's actually really cool. I'm not going to read the entire thread. You guys can read it on your own if you're watching this on YouTube. But if you're watching this if you're tuning in on audio, I'll just show you, kind of explain the visual here. So it says the title, How JPMD Connects USD Works. I'm assuming that's what the characters look like. So on the left side, you have JP Morgan. At the bottom and above it, there's a square that says Coinbase ecosystem. Coinbase client has like it's kind of like a flow here, really. So you have a Coinbase client, which holds USDC stable coins. And they have pretty much three options. One, they can custody, which stays with Coinbase self-custody or self-hosted. Coinbase custody, I guess it talks about the central exchange. They also have the Base app, which is self-hosted, which is self-custody. Or you can open a system. It says open a system, or you can move it to Base, the public settlement layer, which I think Base is trying to create its own payment settlement protocol, because it's not just Base is trying to be this everything app where it's not just self-custody, but it's also like like a public settlement layer, I suppose. And I mean, there's still a lot that I don't know, so I'm excited to see what else there is to develop from base. And then it says instant swap JPMD and USDC is where you can swap this. And it transacts on neutral ground, which, it goes down this graph to the bottom here where it says public blockchain rails 24/7 settlement. So that's kind of interesting. But on the right side, you have Coinbase. And it says JP Morgan ecosystem. The JPM institutional client holds JPMD tokens through bank deposit tokens. This is kind of a interesting chart. It's not very clear. So I don't know who made this. It says FinTech Brain Food made it, I think. Well, anyways, just to wrap it up here, on the right side where it says Coinbase, it says that, you can have a JP Morgan account, a bank account, but you can actually buy JPMD tokens from what it looks like. I'm not a JP Morgan banker. I bank with another bank that's pretty big that I won't even mention for my own safety. But for you, if you are a JP Morgan customer, see if you can buy JPMD tokens. That's actually really interesting. I'm not entirely sure how that works. Real side note here. I've been trying to connect my iPhone through my Mac. I have a M1 Pro Mac. I love it, but right now, after updating to macOS 26, like the latest iteration, my entire shit does not want to work. So I unfortunately cannot do a little demo of doing it. But if you have the base app, which I think they've been rolling out access, so if you have the base app, you can actually go on the swapping mechanism, and you should be able to swap your tokens there. But yeah, that's pretty much everything for this episode. Gonna wrap it up here a little bit quick. But yeah, this is JR, founder and CEO of Social Market. My partner is Leon Hitchens. He had to step away briefly. Make sure you like this video if you like it. Subscribe if you want to see more of this type of content. And if you dislike it for whatever reason, you can click dislike. And if you have any thoughts, leave them on the comments. But yeah, this has been JR and signing out.